It's Tuesday, November 24th. It's after the market close, and I'm going to be doing my weekly swing trading video a day early. I want to try and get some spreads done tomorrow, Wednesday morning. That's kind of our last chance to get anything done. If I waited until tomorrow night, we got Thanksgiving on Thursday. We've got a half a day on Friday. The volume's going to be light. I think we got a chance to maybe get into some bullish put spreads. I like the market. I think it's inching its way higher. Let's see if we can get some trades done. So, first thing I'd like to do is to take a look at the market. You can see how we've got a little cup and handle here, upward sloping trend line. Everything's great. We're through that prior resistance level. We're more than halfway up that long red candle. Lots of good things. I think we're going to challenge that all-time high, perhaps even Friday. So we want to get these trades done. Here are some that we tried to get into, but we couldn't. The lesson here is when you see me highlight a stock in the weekly swing trading video, it should be on your radar. Regardless if we can get our trade off or not, you should be looking for opportunities to trade that stock. I can't tell you how many times in the course of the last 3 months we've missed our entry on some of these spreads, but the stocks have gone screaming higher. So please, stocks that are in tonight's list, they should be on your radar. You should be keeping a very close eye on them for swing trades because they set up really, really well. That's a testament to our system. It tells you how well the system works. We've had lots of days where Thursday morning the market is down. We can't get into the spreads because the stocks are trading higher. That's the beauty of relative strength. That's how you know that we're in the right stocks. You get a market pullback, the stocks are moving higher, you should be all over it. So BYND, you can see back in here, we're looking to sell down in here below the 200-day moving average. Never had a chance. Groupon, beautiful. Love this breakout here above the major moving averages. We're trying to get in right here. Never had a chance. Look at that stock move. Lots of meat on that bone. JMI, JMIA. Last Thursday morning, we're trying to sell some weekly options, hoping for a tiny little pullback. Never had a chance. Look at how far that stock has gone since the video was done. It's currently all the way up to 31.50. That stock was down here at 22.50. It's up by almost 33%. Nuon, this is one that we put out last Sunday night. Again, I'm trying to give you as many trade ideas as I can. I'm not obligated to make a video on Sunday nights, but I want to. I'm trying to give you as many ideas as you can, and I'm trying to ingrain the process that I go through to find these, not so that you can make a lot of money, so that you can find these yourself. Because I'm not going to be around forever. It's super important that you learn how to do this. Not that I'm successful, but that you're successful. In any event, Nuon, look at that stock move higher. You could have just traded the stock and made a lot of money on it. Roku, love this breakout right here. Sunday night video. Look at that stock run. It's gone up from the open on Monday morning, which was right around 257, closed today 273. So I mean, this stock's been up about $20 in 2 days. Tesla, wanted to get in on this one last week, being added to the S&P 500, looking to sell a bullish put spread down on that 50-day moving average. Never had a chance. Through the all-time high, stock has a full head of steam, looks really good here. So love this breakout. This stock's going to continue to move higher here. That's the way I see it. So we weren't able to get in on these trades, but we were able to get in on some others. And we actually had one trade that expired, worthless, and we made a 25% return on that. Now we had this nice breakout in here, and that's what we're playing on TWLO. We also had this downward sloping trend line. That was also working in our favor. We had the stock hugging this 100-day moving average. We knew that would be additional support. So the stock ran up and it pulled back and it checked that support level. When this happened right here, I started getting people asking me left and right, what are we going to do? Oh my God, what are we going to do? How are we going to handle this? Folks, scared money never wins. That's one of my top trading axioms. If these positions are really making you nervous, you need to severely trim back your size. There's not any one trade that should make or break you. There's not any one trade that we have on that you should be losing sleep over. And if you are losing sleep over it and you do have too much money allocated to it, then you're going to have to bear the risks. And sooner or later, you're going to get scorched. It's just a matter of time. So, word to the wise, you should not be nervous about any of these. This was a simple bid check that we had right here. We had some rotation out of tech and into cyclicals when this drop happened. The market was not selling off. That wasn't a problem. The stock didn't have any fundamental problems. Just pulled back and checked the support. By the time we had expiration Friday, it was $30 out of the money. No problem. And I'm going through the same routine right now with Apple. Lots of people hand wringing. What are we going to do? What are we going to do? Oh my gosh. Now, in this particular instance, I went close to the money because I didn't want to buy calls. I felt that I didn't have enough market momentum to buy calls, but I did like what I was seeing in Apple. It had nice relative strength, and it's fallen victim to the rotation. We saw QQQ today was actually right around unchanged for about the first hour of trading while the S&P 500 was running higher. That's because investors were selling the mega cap tech stocks and they were using those proceeds to buy the laggards, the hotels, the airlines, the restaurants. So it was a simple rotation. But the stock did not break the strike price because there was something fundamentally wrong with the company or even technically wrong to a large degree. Came down, checked the 100-day moving average, and it bounced, and it finished the day out of the money. So I'm going to keep an eye on it. I believe that Apple's going to continue to grind back. We're going to be in great shape. You know I'm bullish on the market. I believe the spread expires worthless on Friday. For any option position that you have on that will be expiring on Friday, you must check the price. The market closes early this Friday, 1 o'clock Eastern Time. You must check the price at 5 minutes before 1 o'clock. If it is in the money, then you need to buy the spread back. If it's not in the money, it's going to expire worthless and we'll have a winning trade. So Apple is one of the stocks that we do have a position in. So I'm going to put this up right now so that we can take a look at our other positions. And I'm just going to go through them one by one. Qualcomm, SPCE, Hilton, Candy, WKHS, and then I've got 4 new ones that we're also going to be taking a look at. So Qualcomm, there we are short the 139 put and we're long the 138 put, and that's all the way down in here, below here actually, we're in the gap. That's where our short strike price is. This one looks beautiful. Love it. And that one expires on November 27th. So with only a few days left to go, and one of those being a holiday, I'd say we're in pretty dang good shape on that one. SPCE. There we are naked short the $19 put. Those are $5 out of the money. That's going to be a really nice winner for us. So I like that one as well. AAPL, we already took a look at. Hilton, we're banking on this horizontal resistance right here, holding that support. We are short the 92.50 puts. We're long the 90 puts for a 50-cent credit. This one looks really good. I know some of you sold the 95.92 bullish put spread. That also is in great shape. So we'll continue to go down the list. KNDI, we got filled on that one. I'm really happy we got filled on that one. That is a December 18th naked put at $8. This stock is strong. It finished today up around $14. We're all the way down here at $8. If we get a sign on this, I would be so happy to buy it at $8. Please assign me. I'd love that. So all of our positions right now look really, really good. So we're in nice shape. We've got 25% winners roughly on average for each one of these, and we currently have 6 trades on. So looking good. Let's see what else I've got cooking for you tonight. And we're going to take a look at some other stocks that I like. First one on the list is going to be Baba. I like the fact that it was able to get back above this 100-day moving average. I've been waiting for that. I had my alert set. Stock didn't quite get through this horizontal resistance level right here, but it closed right at it. I want to go in and I want to sell an out of the money bullish put spread on it. So we're going to try and stay as close in as we can time wise. And so on Alibaba, we are going to go to the December, we'll have to go to the December 18th on this one, unfortunately. And we're going to go down to the 265 strike price. I'm going to click on that bid, and then we're going to go 262.50, and we're going to be looking to get 50 cents for this. This is our normal routine. If I've got a $2.50 spread between the strike prices, I want to get 50 cents for that. If I can get 50 cents for it, 250 minus 50 is $2. That's my maximum risk on the position. That also is the margin requirement that I have to put up for it. If I take 50 cents, our credit, and divide it by the $2 that we have to put up, that represents a $25 return in 2 weeks and 2 days. Actually, this one's 3 weeks and 2 days. Yes, I like that a lot. If I take a look at how low $65 gets us, it's right in here, which is just above that low. I'm comfortable with that because I feel that this stock is going to continue to march higher, and it's going to fill in this gap right here. So if you're an aggressive trader, if you're an aggressive swing trader, you should be perking up right now. Pete thinks his stock is going higher. Pete thinks every stock he's showing me tonight is going higher. I may want to buy some calls on this. I might want to buy the stock on it. Do what you will with the trade. I think the stock moves higher. As it does so, we'll be able to get more and more cushion as the stock goes up. So we'll distance ourselves from the action as it continues to move higher. So again, on Alibaba, we're going to be selling the December 265 put, buying the 262.50 put. And let me just highlight that again. And that's the spread that we're going to be doing. These are all in the staged order entry screen, so you'll be able to see them very easily, and we're doing that for a 50-cent credit. So that is trade number 1, Alibaba. I like it. I think it goes higher. Boeing. I love this breakout right here. You can see the downward sloping trend line. You can see that it broke above the 100-day moving average, 200-day moving average. It held that support level right there. This is a longer term play, and I highlighted this in a video that I did today during the middle of the day. I believe that Boeing's worst days are behind it. I believe that the vaccines that are coming out right now are going to spark travel once again. By January, February, we're going to see people booking tickets. I think the airlines are going to see a lot of pent up demand. I also feel that they could be eligible for some bailout money. The industry really got shaken hard this year by the virus. I also feel that a lot of Boeing's lawsuits are behind them and the grounding of its planes. So I believe that Boeing is going to continue to move higher. This is a longer term play because it's a newsy stock and there's information coming out on it all the time. So here's how we're going to play it. I have to ask you, if you could make a 25% return in 2.5 months, would you be interested in that with a very high degree of probability of success? Yes. If the answer is yes, then this is a trade that you want to do. So I'm looking to sell the 180 puts and buy the 175 puts, and I want to do that for a $1 credit. And that puts us all the way down here on that 200-day moving average. And that also puts us way down here where Boeing was still going through all of the woes that it had. Well, a lot of that's been resolved now. I don't think that stock ever sees that price level again. I want to try and get that spread done. This is a stock out of the picks tonight that I would tell you I'm not go gangbuster, gotta have it, buy some calls. Not on this one. That's why we're giving ourselves lots of time, and that's why we're really distancing ourselves. So let's take a look at that option chain, see where everything lines up. We're going to go down to the normal monthly expiration for January, and we're going to go down to the 180, 175, and there you can see it. And there's that 200-day and 100-day moving average. You can see that. We're also more than one standard deviation out of the money on this stock. And if we take a look at where that spread is currently lining up, you can see that it is 50 cents bid offered at 98 cents. We got to get a dollar for this. Well, gosh, Pete, we're not even in the same zip code on this one. How are we going to get a dollar for that? This stock is volatile. We do not need to get this trade done in the next couple of days. This one can stay out there for a bit. If it pulls back in here down to that 208 level, let's call it, or the 204 level, somewhere in here, just to check the breakout, which is very possible. Look at the moves that you get in this stock. They're huge. If it pulls back a little bit, the stock, when it moves $10. So we've got a chance to get this done. I don't think it's unrealistic. I think that we need to get it done in the next week or two to have a shot at it, though. So that's the next trade that we're going to do. We're going to be selling the Boeing bullish put spread using the January monthly expiration, selling the 180 put, buying the 175, getting a dollar for it. Trade number 2. Let's go to trade number 3. Now this one I think has got a nice little head of steam. It doesn't move very fast. It's Cisco. And you can see Cisco dropped hard after an earnings announcement, put in this, what I believe is a capitulation low. There's your earnings, gapped higher. It's been able to hold the gap, long tails under body. Love that support level. I don't think it comes back down to this level and challenges that gap. It's already tested it 1, 2, 3, 4 times. There's a nice little support level forming right here. Boom, off to the races through the 100-day and 200-day moving average, challenging this resistance level right here. I think Cisco continues to move higher. We are going to get aggressive with this one. We are going to sell a December 18th bullish put spread, and we're going to go very close to the money on this one. Why? Because I think the stock is going to move higher. So we're going to sell the 41.50 put, and we're going to buy the 40.50 put. And that puts us right down in here below the 100-day moving average, which I believe is going to hold. I think the 200-day moving average is going to hold for that matter. But that 100-day should hold for sure. So in this particular case, we've got $1 between the strike prices, 41.50 and 40.50. So you should know that we're going to be looking to get a 20-cent credit for that. But in this particular case, we're going to notch that up just a little bit because we're going close to the money. We're going to try and get a 25-cent credit for this. And if we're able to do that, this changes our profit picture because we make 25 cents, we risk 75 cents. This would be a 33% winner for us if it expires worthless. I like Cisco. To recap, on Cisco, we're selling the December 18th, 41.50 put. We're buying the 40.50 put. 25-cent credit. That is trade number 3. So let's see if we can get one more in here. And ZM. I like ZM. 1 test, 2 test. Bounces off the 100-day moving average. Horizontal support right in here. Right on that 100-day moving average. I'm lining up that 370 put that's right in there. So let me bring the crosshair up here. That is where we want to be trying to get this spread done on that support. Right there, there. Multiple touches below the 100-day moving average. It does have relative strength if I put up that 1 OSI, which incidentally, all of your trades should have relative strength. If you're swing trading, the stock should have relative strength on a daily basis. So make sure that you're using that criteria. But in any event, we want to get as far out of the money as we can. Now, ZM is a mover. It moves around a lot, so these premiums are rich. We're going to go to the December 18th expiration, which is 3 weeks out. We're going to go down to that 370 strike price, and we're going to sell the 370 put. We're going to buy the 360 put. We've got $10 between the strike prices here. So you're going to be doing fewer contracts on this because you're going to have to put up more margin per contract. I use a dollar allocation basis. So I'll be doing less contracts on a trade like this, but on a trade like Cisco with only $1 between the strike prices, I'm going to be doing a lot more. I'm going to be doing 10 times more contracts, in fact. So I like to use a constant dollar allocation across all of my trades based on the margin requirement. So because there are $10 between the strike prices, we know that we need to bring in at least a $2 credit on this. And we're going to try and go a little bit higher on this one. We'll go 250 on this one. So we're going to try and get a $2.50 credit, similar to what we're doing on Cisco. We're very close to the money. So there, this would represent a 33% winner if successful. We have to put up $7.50 for this spread. We stand to make $2.50. That's a 33% return in a little more than 3 weeks. ZM, December 18th expiration, selling the 370 put, buying the 360 put, $2.50 credit. That's all I got for you today. I hope we can get some of these spreads done. That would give us a really nice portfolio of spreads. We've also got some that are going to be expiring on Friday. At least I assume they're going to be expiring on Friday. Please remember to buy those positions back 5 minutes before 1 o'clock on Friday Eastern Time. It's an abbreviated session, so make sure that you're keeping a watchful eye on those positions. And let me take a moment to wish all of you a very happy Thanksgiving. I hope that you enjoy your time with your families. Please be safe, and we will see you probably Monday. I don't plan on posting any market comments on Friday. I will be posting them Wednesday. Won't be doing a video tomorrow night. So again, please enjoy your holiday, and we will see you bright and early Monday morning. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.